Standing by at the CME Group in Chicago is Larry Levin from Trading Advantage, who has been in and around the S&P 500 futures pit at the CME for almost 20 years. And back with us is Jim Bianco, the founder and president of Bianco Research. He says that 2010 is the second half of the credit crisis. And Jim, I want to start with you because I feel the same way. It's credit crisis part 2 right now.
Absolutely. We borrowed money, we printed money, we guaranteed a bunch of debt to stop the decline in 2008. Now, with Greece, what we're finding out is all that borrowed money, all that guaranteed money is the problem. And that's what we have to deal with.
Is it as bad as part 1?
It can be as bad as part 1 if it's not handled correctly, but it could probably not be as bad. It might take, though, a lot longer to play out, like many years as opposed to months like we saw in 2000.
Although part 1 resulted in the worst recession we've seen since the Great Depression, major contraction in the economy, 10% unemployment. You see that getting worse or just continuing along where we are?
Well, it's continuing along where we are right now because what we're left with to prevent that from getting worse is we're left with high debt levels. We're left with debt burdens that countries like Greece simply cannot pay, which leaves you in a bad situation. Either do austerity means do without, cut spending, cut wages, go through a recession, or default on debt, which puts the banking system in a big bind. There's no good answer when you get to that point.
Hey, Larry Levin, I want to bring you into this conversation. I want to actually look a little bit at the trade right now because we've just got a few minutes left in today's session. We are seeing those equity averages just come off their lows, but we did see the selling steepen over the last half hour, 40 minutes. What's going on here?
Well, it's interesting, the volatility only seems to pick up on the downside, although obviously last Thursday, might be an exception to that. But when we see these big drops like we saw, the Dow went from down 80 to down about 120 in just about maybe 10 or 12 minutes or so. That volatility picked up a whole bunch, not only the Dow pit, but the S&P pit. The short covering rally just came in just right after that. A kind of a pretty big jump in the S&Ps, about 7, almost 8, 9 points in the S&Ps off that low. So there is some real good action in here. An active trader, he likes that kind of action. An average investor, maybe they don't like that kind of action.
All right, let's get a breakdown of what drove the markets down, 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 and then even further down at the end of the day. Still with us here, Larry Levin from Trading Advantage and Jim Bianco of Bianco Research. And Larry, let me start with you here and ask you what pushed us down in the last hour of trading. We just went another leg lower. What was the catalyst there?
I was a little surprised, to be honest with you. I didn't see any news flash or any breaking headline come out right at the time when we started dropping, because we saw the S&Ps drop about 10, 12 points. It really was pretty much nothing going on in the middle of the day, and then you really saw the bottom fall out in the stock indexes. I have not seen the news that really drove that market, but there was a decent amount of institutional selling in really all of the stock indexes, but especially the S&P 500.
Oh, well, another technical glitch, fat finger. We'll cancel those trades tomorrow. No big deal.
Yes, exactly.
What do you think about the U.S. exchanges? I mean, it was a week ago, but I think a lot of people still haven't recovered yet. It was exactly a week ago that we saw all of a sudden the Dow in 5 minutes drop 900 points. Has there been some faith lost?
I think so, because I hate to be the purveyor of gloom, but you have potentially the worst outcome of that. We had the Dow drop. We had it come back. We said it was fat finger. It wasn't. We said it was a computer error. It wasn't. We're left with, we've designed a system that can crash, and maybe it can crash again until we fix it. And that's a little unsettling for a lot of people. We don't exactly know why it happened, and we hope that we can fix it so we don't have the market go down as precipitously as it did a week ago.
Well, and the exchanges just unilaterally break contracts.
I don't think they will, because a lot of what's been happening with this flash trading is very profitable for exchanges. So it's not like, let's just do away with it. They make a lot of money.
In canceling the trades.
It wasn't bad enough now to do it, but they got to be very careful in doing that, because then they'll start losing the trader confidence. If you're losing investor confidence now, what about the trader that's looking for an opportunity if markets get irrational? Well, I did a great trade, but I hope they let me keep it. And we don't want to get to that situation.
Hey, Jim, I want to talk a little bit about fundamentals here, because the fundamentals here in the United States, certainly the economic news has been improving. Jobless claims today came in a little bit worse than expected, but the numbers overall have been getting better. But is that enough to kind of outweigh the concerns over in Europe and to kind of outweigh all the nervousness that's once again back in the market?
I don't think so, but you're right that the numbers are good. But the problem with Europe is everybody's kind of drawn a line May 1st, and they said, okay, all the numbers up to May 1st were before the euro exploded and we had all of that problem. Now, post May 1st, we have to see what happens with the euro currency. Does it go down to 120 or lower? Does Europe go into a bad recession? What is the outcome of the health of their banking system? the answers to all of these could completely overwhelm whatever economic numbers we have. If the answer is no big deal on all of those, then the economic numbers take over, and what looks like a very good recovery will continue along.
But it depends, and it's if.
Yes, exactly.
So, Jim, we're just talking about the energy sector with Adam. What do you think about the energy group in terms of the trade we've seen?
Not surprised by the move down, as they were saying, if the dollar goes up, the currency, the crude oil has to go down. Otherwise, if you take a look at what crude oil prices are in Europe or in other countries, it skyrockets. And if they're going to have a problem in Europe, they're not in a position to pay for much higher crude prices. So that's kind of the natural offset. Remember, everything's priced in dollars, so it has everything else has to adjust to us. Right. And that's what you're seeing, that the crude oil price is adjusting to the move in the dollar rather than the other way around.
Are you not concerned that we see gold do that as well? I mean, if there are further problems in Europe, elsewhere around the world, people rush to the dollar for safety. As the dollar goes up, does gold not come down?
No, except gold is taking on a whole different dynamic right now. Something interesting happened in gold in the last couple of days. It's made an all-time high against every major foreign currency. It's been a long time, like 30 years, since we could say that gold has been at an all-time high against all of them. The Swiss franc just went off this week. Gold is kind of the anti-paper right now. The marketplace, there's a certain segment in the market that's worried about paper currencies, whether it's euros, it's yen, it's Swiss francs, or dollars, and they want out of the financial system. The closest thing you can get to out of the financial system is gold, and that's why it's been rallying regardless of what any currency is doing.
Larry, let me bring you into this conversation about, we're talking about gold in terms of the movements we've seen. I mean, what are your thoughts?
Well, it's interesting. There's certainly an awful lot of, if you walk through the Chicago Board of Trade here, there's an awful lot of brokerage and investment firms that are pushing gold. Gold's the hot thing right now, so it's not that surprising to me. Obviously, with seeing the market coming off quite a bit, people going to gold worried about inflation, but there's certainly an awful lot of people pushing gold right now too. You'd be hard pressed to watch your show or any of the other financial channels and not see lots and lots of ads for gold. So it's it's really in everybody's mind right now. It's the safety thing to do. It's the popular thing to do. Whether that's going to continue, I'd rather be short gold than long.
I was just going to say, what does that say to you, though? Matt's right. You sound a little bit cynical. Are you?
Yeah, a little bit. I mean, to me, it feels like another bubble. I'll be honest, I don't have a position in gold, but I'd much rather be short than long right now. I mean, everybody's long. If everybody's long, they're probably wrong.
Do you see inflation coming? Is that a concern for you? Is that one of the reasons you like gold?
It's not a reason I like gold, but I do see...
only the anti-financial system trade, basically.
The anti-financial system trade, and it's a powerful one right now. But I do see inflation coming back. I know that that's a minority view. If you break it down real quick, 40% of the inflation statistics come from housing. It comes from rents. The first-time home buyers tax credit was a downward pressure on rents. That ended April 30th. I suspect you'll see rent prices stabilize, and I'm barely talking about the calculation of CPI. It could start moving higher. And that could be very problematic for the Fed that wants to stay at zero forever if inflation starts moving up.
You see home prices moving up as well?
No, I don't see, because this is about rents. This is about the migration of people that normally rent to buying. They were doing it en masse because of the first-time home buyers tax credit. The demand for rents fell. That ended, so the demand for rent should stabilize. It won't help home prices, but it will help push CPI higher.
What about Larry's point? And it is true, most everyone we talk to likes gold. I mean, if there are too many bulls, it's maybe not a great trade, is it?
Yeah, he's exactly right on that, but I guess the question is what is too many bulls? I mean, maybe I'm old enough to remember what everybody was thinking about gold in 1980, and this doesn't even begin to
You're
come
not that
to...
old.
It begins to come to how... We're nowhere near where we were in 1980 as far as exuberance about gold. Gold was something that was going to redefine the world at that point. Right now, it's just a hot trade.
You mentioned the Fed, Jim. I mean, how much longer do you think the Fed can keep rates at these levels, or can they afford not to keep them at these levels, considering the situation over in Greece and so on?
The Fed likes to use the word exit strategy, which means either raise rates or reduce all of the excess money in the system. I think that the Fed has to get started on it soon. The Fed's own papers have said that if they want to go back to neutral, it will take years with an S at the end of it. So if inflation heats up, they can't say to the market, okay, we're on the case now, give us till 2014 to get back on sides. The market's not going to wait that long, so they might as well take advantage and start doing it now. And I suspect there's a growing minority in the Fed that wants to do exactly that right now.
Larry, let me quickly break in and ask you something completely unrelated.
Sure.
A viewer writes in and points out that we did see that other leg down as soon as we got the news and the images about the prison blast outside of Athens. Of course, last week at this time we had concerns about violence in Athens, and that sparked the big drop. How sensitive are you guys to what goes on in Greece?
You know, I'll be honest, I'm not so sure that I could pin the selling that we saw at that time on those pictures. They just seemed like a little bit of too much of a violent, not a super violent, not like we saw last Thursday, but more of a violent move than it would just be, kind of protesting type thing or the pictures that you described. I don't know if I could pin it on that. You just never know, especially with computer trading nowadays. You never know what people are doing. So, you just never know.
All right, we got to run. Hey, Larry, thank you so much. Larry Levin there out in Chicago. Jim Bianco right here in set. Great to have you here.
Thank you. Thanks for having me.
Appreciate